So are you wondering if cash value life insurance is a good way to invest right now in 2023? In this video, I'll tell you how the market is looking and whether or not investing your money this way is really a smart move. Number one point I gotta make, and this is a big disclaimer, huge disclaimer, is number one, life insurance is not an investment. I repeat, life insurance is not an investment. Anytime someone tries to say that, they are violating laws, and I'm life insurance licensed. I would know because that's a law. They say never ever say life insurance is an investment. Now, is it a savings vehicle that's combined with life insurance policy? Yes. If you have whole life, universal life, and those kind of things, yes, it is a vehicle you can actually do to save. So the question is really, is it a good place to invest your money this year? No, it's not a place to invest your money, but it is a great way to save. It's a great way to build your money up tax-free. It's a great way to accumulate it and earn more than 0.0% like you get in your bank account. So yes, it's a great way to build up cash and save. But again, life insurance, especially things like whole life insurance, is not an investment. I repeat, it is not an investment. All right, now, like I said, the interest rates are much better. You can put your money in here, you can save, but I'm gonna make a key point here. It doesn't have to be either put your money in life insurance or put your money in investments. Although traditionally, with many insurance agents, they'll tell you, hey, put your money in here, put it away for many years, and then eventually you could retire or quote unquote have a supplemental retirement income from this policy. Now, to help understand how these policies work, whether you're doing universal life or whole life, I tend to favor whole life because universal life does get more expensive over time. You could end up losing it down the road if you live longer. I'm not a big fan of it. It's kind of like term insurance and investing, the difference. Not a fan. Whole life, although it might have a little bit more expenses up front, there are ways to reduce it so that you can actually get it paying you better than even a universal life policy and make it work in your favor. Now, the one thing I've noticed with this is that yes, you could save into those things, and many people put this as a long-term savings vehicle, and you can pull off retirement income from it. So although it's not an investment, it is a great place to save to earn better returns. The one thing that's nice with whole life insurance is that when you take out that money, it comes out tax-free. Because when you put it in with after-tax dollars, much like a Roth IRA. You put it in with after-tax dollars, it grows tax-free or tax-deferred, but then as you access it, it comes out tax-free, just like a Roth IRA. The good news is this, when it grows, it does grow tax-free, but you can actually pull out that money earlier than the age 59 and a half. So you know with a Roth IRA, they got all the dumb rules like 59 and a half rule, or you can only put in so much per year, or if you make too much money, you can't get a Roth IRA unless you do the backdoor Roth IRA, so you have to go take extra steps to be able to do a Roth still. That's kind of a pain in the butt, isn't it? But with life insurance, you don't have that problem. Life insurance, you can actually put in up to 25% of your stated gross annual income with many companies and many providers. So if you make $100,000 a year, you can put in up to $25,000 a year. That's actually more than what you're allowed to put into your 401k usually. You can also, if you make even more money than that, you can even do more. And so there's a lot of cool things you can do with it that allows you to have this tax-free income. But again, most insurance agents, when they sell it this way, they'll tell you, well, hey, either you put your money here or you put your money in investments, or you put a little bit here, and then you do the rest of investments. And most often, you'll have them tell you things like, hey, put this into your 401k, or put the other money into your mutual funds. In fact, many of them will even say, put your money in the 401k to get the match, put the rest in life insurance and or mutual funds, right? That's pretty much it. There's no real magic sauce when they're trying to help you do this. The truth is, they don't really do anything for you anyways. I would challenge you with this. It's not about either or. It's not about putting your money in the policy or investing. And I don't mean even splitting it. I mean, you can get all that money working for you in the same place. How? This is where I refer to as more of a max ROI, infinite banking. Now, infinite banking, when you've heard of this term, there's various definitions people use. Often they'll talk about using this with like buying cars or buying a house and things like that. And that's fine and dandy. It can work from time to time. But for the most part, that's not how I'm using this. I actually use this money to then turn around and invest. Now, is life insurance an investment? Nope. But the money that's in there, the cash value that's in there, I can access. And I can use that to invest wherever I want, wherever I feel like. Gosh, right? So I can use that money to my benefit. I can even put it towards my business. I could put it towards buying real estate properties. I can even blow it in Vegas, although I don't recommend that kind of investment or that gamble, right? Definitely don't recommend that. Don't recommend putting in the stock market or those kind of things. Those things, again, high risk, don't believe in that. I'm much more conservative than the people that like to put money in mutual funds and 401ks. That's risky. I like to be conservative. I like to make a better return with less risk. So what do? I ensure that I get a policy set up that has the lowest cost possible. Because unfortunately, most agents that are insurance brokers, many of them will actually set up a policy on you, but it has these upfront fees that it'll take you several years before you even have the same amount of money as you put in. With the way we design our policies in our type of infinite banking, usually you have just as much money as what you paid into it by the 5th year, if not the 6th year, right? So it's kind of awesome because now that money is growing, usually from the 3rd year onward, and making more than what you've paid into it. It's actually essentially this tax-free supercharged savings account. But on top of that, what can I do? I can take that money and use it for wherever the heck I want, right? So for example, in history, did you know that Walt Disney actually funded Disney World using his life insurance policy? Now the banks, when he went into the bank to get funding, they said, no, what's this place in Orlando, the swampland? You want to buy this and turn it into an amusement park? You're crazy. You got lucky with Disneyland, but good luck doing that in the swamps of Florida. Well, he said, well, what if I put up some of the money myself? They said, if you do that, if you put some of your skin in the game, we'll put some of our skin in the game too. So he did. Where did he get the money? From his life insurance policy, from the cash value. He was able to get the access to that money. You can withdraw it, or you can even borrow against it from the insurance company and use that money to invest. So that's what he did, and the rest is history, right? So you can do those kind of things. Even companies, if you have a real cash crunch, many times business owners will tell us, and I'm one of them, but many times business owners will tell us, they say, I'm trying to keep cash reserves in my business, but it's really tough. What if I need access to cash? And sometimes we'll keep cash personally on the side. Well, did you know you can keep cash inside this life insurance policy, earning at least 5 or 6% tax-free gross returns on this money, and then turn around and you can use it whenever you need it. In fact, my wife, she says, Chris, I want to keep at least $300,000 in the bank that we do not touch, just for emergencies, just in case. We want at least a year's worth of expenses. Now I told her, I said, listen, I don't want to keep that in the bank earning point nothing percent and earning really nothing, and then I get taxed on that point nothing percent. So I said, let's make a deal. Of that $300,000, let's earmark over $200,000 of that inside our life insurance policy, this infinite banking policy. We earmark over $200,000 there, so we're making tax-free money where the IRS doesn't take anything from it, and it grows much bigger than the savings account anyways. And then the rest of the money is in like the local bank or an online savings account where we can access it even a little bit quicker. So that's what we did. Now I'm making well over $10,000 or more in interest than I would just leaving it in the bank. You can do the same thing. The great thing is if you need it for business purposes, you can still access that cash, especially if you set it up right where it becomes a cash-rich policy. That is the important thing. And I'm going to tell you, 99.9% of insurance agents don't do it the best way possible. 99% of them don't even know how to do it in the first place. The 1% that do know how to do it often will choose not to anyways. For 2 reasons. Well, really one main reason. They'll pick it for the main reason of they don't want to give up commissions. They'll say, you know what? Maybe we'll just do this 60-40 blend where you'll have 60% of your money going in the first year, 40% going to costs. So if you put in $10,000, you only have $6,000 in there, which isn't bad. That's better than a traditional policy. But if you can put that same $10,000 and have $8,000 in there, $2,000 more, that's 25% better. Why not do that? So you want the lowest cost policies you can get to allow your money to grow faster and unencumbered by excessive fees and commissions that you shouldn't be paying. So that's the important thing here. Now, here's the other thing you could do too. And this is where it gets to be fun. Not only can you use it for emergency reserves, like we said, not only can you use it for business purposes, but you can use it to invest. And not just invest to make money once, but actually get your money to pay you twice. Well, here's how it works. You heard me referring to getting a loan from the insurance company, right? The truth is you can get a loan from the insurance company or the bank where the cash that's in there is collateral, not the death benefit. We're not talking about that. We're talking about the cash value, the savings part of it. That tax-free savings account, you can actually get a line of credit against it, a loan against that money. Why? Because they know it's guaranteed, especially in whole life, they know it doesn't lose money. So even banks are willing to loan on these things. And what can happen is you can get a loan. Yes, you are paying interest to the bank or the insurance company, but you're also earning interest on all that money that's in there. So the cool thing is that money's compounding, but if you take that money and use it to invest, say like I go and buy an investment property, and say that investment property creates a 10% cash on cash return, which is pretty typical for the properties I go for, well, that money comes back. So say that I put $100,000 down on a property, it's kicking off $10,000 a year. I take that $10,000, use that to pay down that line of credit, that starts going down, which means the interest I'm being charged goes down. At the same time, the balance of my account is going up. So it's compounding interest while this one is declining in interest. I make money here. I make a net profit on the interest that I make in more interest over here, while also still making that 10% in that real estate investment. So as a result, what happens? I now have just made 10% plus whatever percent on top of it, depending on the interest rates. In many cases, I can make at least 11, 12, 13 plus percent versus just making a plain old 10% by using my checking or savings account. That is the beauty of this, is that you can actually have your cake and eat it too by using infinite banking. So yes, can you invest with life insurance? Yes, but it's not an investment. But you can use it to go and invest, whether it's in your business or in other investments, to actually make great returns for you. Now, of course, you might be wondering, is this too good to be true? Well, check out this next video. Is infinite banking a scam? Right here.